Good afternoon, everyone. Let's wait for a little bit while people are joining us. Okay, I believe we can start as people are tuning in. And as you know, today we are here to discuss the results of the first quarter of 2022 in all segments. And I will be starting with investment segment first. So you probably all know and all feel that the beginning of the first quarter and the end of the first quarter were completely different in terms of market sentiment and in terms of how we forecasted the market and how we perceived the market at certain point. So today my goal is not so much maybe to give you a history lesson and speak about the first part of the quarter and beginning of the year, but try to maximally tell you what actually happened during this quarter and give you a little bit of an insight on what we at Colliers feel about the trends and tendencies for the next quarter and this year in general. So first of all, let's touch the volumes, our favorite subject. As you can see, all Baltic countries made around 270 million in the first quarter, and Lithuania was leading with Estonia following and Latvia just a little bit behind. Obviously, the majority of those volumes actually is January, February, but I have to say that quite interesting transactions also happened in the end of the quarter. So our main takeaway here is, despite the increased volatility and maybe some short period of uncertainty among investors and a little halt in the transaction speed and maybe willingness to execute some transactions, let's say at the end of February. In March, we already saw that the market players came back to the transactions they started previously, and the majority of those transactions are either completed or are continuing at the moment. So market is still quite active. In terms of the deals that happened in Q1, to wrap up the factual part of this presentation, in top three deals this time, it's only Estonia and Latvia. In Lithuania, despite the large volume, the deals were smaller in the beginning of the year. So the largest deals around maybe 10-15 million maximum. But in Estonia, interesting deal, the largest deal of the first quarter was acquisition of Faust capital portfolio, retail portfolio, which consists of 4 properties located not in Tallinn but across Estonia, and the buyer for this portfolio was Capital Mill. So all the properties together amount to quite significant volume of almost 60,000 square meters, and this transaction overall was slightly above 30 million in volume. And what we saw here is that the main driver for the transaction was, of course, an attractive yield, which was very much in line with the strategy of the buyer, Capital Mill. And the second transaction in Estonia was a stock office transaction around 10,000 square meters, and this just shows that the stock office trend we mentioned already in many previous presentations and webinars is continuing still is going strong in Estonia. And with stock offices, we do expect to see more of those deals happening also in Latvia and Lithuania as we go further into the year. And speaking about Latvia, as we are presenting from Riga, always happy to see big transactions. And in this quarter, the buyer who ensured that Riga is actually in the top 3 of the transactions is Hilly Properties. And they acquired a property which was sold by Lords LB, Lithuanian investor and developer. And this is a Rimi hypermarket on Stirnu Street 26. Quite sizable transaction, the volume around 20 million. And this asset was in the market for quite some time because the seller was quite firm on the price expectations. So we are happy to see that such transaction could materialize in the end of Q1, so basically in March this year. Well, this is more or less it about the let's say, interesting events and top deals of this quarter. So let's switch a little bit our minds to the future and what we see is going to happen. Well, first of all, I already mentioned that the investment market did not stop by any means. And if we speak about the cash flow investors and cash flow strategies, after speaking with various investors during recent conference in Estonia, after going to MIPIM in the beginning of March, in the middle of March, we see that those cash flow strategies are not changing significantly because the fundamentals of the assets, they remain good. And actually what we see is that when we look at the tenants in the properties, in the cash flow properties, majority of those tenants are oriented towards European business, towards European suppliers. And at the moment, we don't see any structural shifts in terms of the quality of the cash flows. Of course, there's a new layer of checks you need to perform, and you need to know your tenants maybe even better in the current environment, but still this does not influence the market drastically and doesn't change things. But of course, if we speak about more opportunistic, more value-add strategies and development sector in particular, of course, this sector faces more challenges at the moment, and those challenges come from various sources. So first of all, of course, is the cost of construction and the cost of services and utilities for the tenants of the buildings. And situation in the construction field is so that the cost currently increased by different estimates. We hear different numbers, but maybe around 30% would be a good average number we hear. And there are some still issues with supply of some of the materials for the constructions. And this in turn means that maybe not all of the projects which were in pipeline, which was quite impressive for the Baltics this year, maybe not all of those projects will materialize. But at the same time, we see big developers who already started construction, are in the midst of it, and after speaking to all of them, we can confirm that majority of them plans to continue, and they are currently looking for solutions with construction companies and looking for solutions to bridge the gap in supply of the materials. But the main challenge here and the main interesting thing to keep attention and to pay attention to is actually how the increased construction costs will work alongside with the increased utility costs for the tenants and alongside the inflation environment we see at the moment, which is not zero anymore, and the numbers are pretty high. And we see that that landlords are starting to implement those indexations in practice. So for many developments, this will be quite a challenging moment because, you know, you have to rise the rent rates because the construction costs increased, but the tenants already see that their total costs are rising by themselves, and it would be quite tricky to negotiate also the increase of the base rent. So I think this is the key of 2022. We will somehow need to find a new balance in the market, a new equilibrium for the developments to continue. But there's always a silver lining. So the owners of existing buildings can be quite relieved in a sense that their buildings probably became a little bit more valuable given the replacement costs, and also their rent rates became a little bit more competitive, as we understand that the new rent rates for development projects will be higher in the future. If we speak about the market activity overall, so even in the end of Q4, we did not forecast that the Baltics will be able to maintain the 2 billion investment level, which we saw previously in 2021. And we actually forecasted that the overall investment volumes will be around 1.25 billion. And this was due to many factors, because of course 2021 was exceptionally good year, and we saw 24 transactions about 20 million, which is like more than 120% above our number from 2020, which was only 11 transactions above 20 million. And also in 2021, overall number of transactions increased 78% compared to 2021. So exceptionally good year. But even in the end of last year, what we saw that there was just not as many large transactions in the active pipeline as in the beginning of 2021. And we also notice that the trend still continues in a sense that there is a quite significant lack of supply in the market at the moment. So owners, landlords are still not willing to sell. They're still uncertain what to do with the money next. And there is a strong tendency to keep cash flow generating projects and do nothing with them. So this trend continues. And at the moment, we see occasional change of heart here and there, but overall, the sentiment really didn't change. But in terms of the projects which are on sale, we see quite strong interest. We see quite interesting dynamics from the investor side. And even though, again, after visiting MIPIM, we understand that the Baltics are not crossed out of the strategies of international investors, but being very practical, we do realize that it would be probably more difficult to attract complete newcomers to our region at the moment. And this is still a post-pandemic ripple effect, but also, of course, given the current environment, there is just less tolerance for risks and a bit less willingness to explore new markets compared to already existing geographies. But at the same time, we are very happy to hear that the local Baltic investors are growing, and the list of those investors is actually now supplemented quite significantly with, let's call them non-real estate players and investors. And we saw this already in 2021 because if you check out our report, you will see that there are some Estonian companies, for example, VKG, who spent quite significant amount of money in the Baltics last year, BTA, who entered into the partnership with YIT in residential segment, some other private investors from Estonia investing, hundreds of millions into the real estate segment. They are very active, and they will continue to be active in 2021, helping with our liquidity and maybe in a way replacing this international capital we so eagerly wanted to attract in 2019, 19 and 20 prior to the pandemic. So liquidity is pretty good. And what else? Probably the last point from me, as I'm running out of time, is that still interest toward land acquisitions is pretty strong, especially in Estonia, where you don't have a burden of land tax, and you can hold the land plots for prolonged amounts of time. But also we still see that interest toward land plots in Latvia, in Riga, is very strong. strong. But with immediate development plans, as I said, there might be a bit of a slowdown if for example, developer haven't started anything, any construction on the certain land plot. Those plans may be postponed till the market costs and supply chains normalize again. And this means that we see an increased opportunity for projects which involve reconstruction in contrast to the new development. So renovations, reconstruction projects, anything where you can create a product based on already existing building structures becomes more interesting to the investors, and we already see requests and real negotiations in those segments. About the banks, difficult to say. Currently, we hear different information from different banks. Most of them will keep, at least they say that they are keeping margins at the same level. Some of them forecast slight increase, but of course, investors are mindful of still potential growth of the financing costs due to interest rate growth. So that's also in mind of the investors. But at the moment, we do not forecast that the yields actually will go up. Because as I mentioned, there is really strong competition at the moment, and even though the drop of the yields in industrial and office segment is probably paused a little bit, we are now forecasting more or less stable prices, but still the increase for the good quality assets might not happen due to this competition. So this is it from me for today, and if you have any questions, please reach out to us or read our full report on our webpage. And now I would like to give a word to my colleague Evgenia with retail segment. Thank you.
Hello everyone, my name is Evgenia, and I will continue regarding the retail segment and what have happened in the previous quarter. Well, first of all, if the main agenda for investment, office and industrial remain the question about the construction costs, for the retail segment, the main question is fix or not to fix the utilities prices. And if you look at the retail stock overall, this is the answer why we are so concerned more about the prices for utilities rather for construction costs. And as you may see in the Tallinn, Riga, and Vilnius for 2022, the retail stock is not really active. I would say more inactive. In the Tallinn, we see that under construction just 30,000 square meters. In the Riga is just 7,000 square meters, and the Vilnius you may see very poor numbers which are showing the 0 square meters which are under construction during this year. And actually, this is the answer why the retail segment is more and more concerned about the prices for the utilities, because actually we are working and actually all activities are around the current stock and the current object where the all activities of the tenants and the landlords is focusing. Here we also may note that currently we also see that from the tenant point of view, there is the worries about the pricing for the utilities, and it means that first of all they are going to the landlords to ask additional discounts for the rent. And here we need to understand a very important line, because in the beginning of this year and in the previous year, the tenants was asking more discounts for the rent due to the fact that there was the COVID. But actually, the good news that the COVID restriction ends in the shopping center, and right now we are fully reopened, but about that we will speak a bit later. And actually, the tenants was referring to the COVID as one of the reasons why they are asking the rent discount. But here we may note, and we also already started to hear and see the impact, that tenants are very concerned about the rising about utilities cost. And we see that in the future, tenants will also like the question about the rent prices, and it will be very connected to utilities prices. And it means that here we need to understand when basically the COVID and all restriction ends, And when we really need to adapt the current situation and adapt the current rates according to the market, what we have at that moment, and how together with the utilities we could balance the rent rates and the expenses of the all tenants. And actually, it's one of the main questions, but still we are in the retail segment. We still feel that the construction costs are rising, and it could affect also overall the retail market. But just to sum up one more time, the current stock are big at the moment, and under construction stock is not so big. So we are really working with the stock what we have in the moment. And taking into account that the vacancy rates are still comparing like to the pre-COVID times are higher than before, we see the gap, and we see the places for the relocation and for the entering new tenants to the market. If we also look at the rent rates, we also see that in Riga the rent rates are the vacancy are 7.5, in the Tallinn is 4.5, and in the Vilnius it's 2.6. But also what we may note that some of the vacancy rates are connected to the refurbishment or relocation of the tenants, which is actually happening right now in the all three markets, because we may see that in terms of the refurbishing, the new concept and the new construction works in the shopping centers, the landlords are quite active. And first of all, we may see that, for example, in Tallinn, the shopping center Virukeskos, they have announced that in 2022 they will open the wellness, beauty, and the medical center, which will take place in the upstairs. At the same time, we also saw that in the Europa shopping center was launched the food court with a new experience. And also we also saw some changes which have happened actually in the previous quarter, because the shopping center Alpha was fully renamed, and right now it's officially the shopping center Alpha is with a new brand name, shopping center Akropole Alpha, which will continue to work under that brand. And in that term, we will also see some changes in terms of the tenant mix, in terms of the concept wise, how the shopping center will look like by the style, by the concept, by the design. So it means that at the same at the current point, we see that somehow the vacancy rates could be also connected with some relocation or refurbishment in the shopping center, because obviously we see that also landlords start to think about the right position for the tenants in the shopping center, about the segmentation, and about all other activities what could be done in the shopping center in order to provide to the customer more interesting experience and more interesting retail in the upcoming future. And also, despite the lack of the pipeline, we also see that the retail, in terms of the changing the ownership, as already mentioned, Angela, is quite active. And in the previous quarter, we see that the hypermarket Rimi was acquired by the new company Healy, and also at the same time, we may announce that the K3 Imanta Mall, or how we know it in the Latvia, Imantas Tirgos, was acquired by Green Formula Capital. And it means that also in the upcoming future, we will see that this potential retail object will be remade. There will be the new concept, new ideas, which also will be added to the retail stock market. And apart from that, also landlords are really focusing, as I mentioned, on the activities and about how they attract the customers back, because the good news, what I have mentioned, that we were fully reopened starting from the March, and actually in the April, there was no need to wear the mask in the shopping center. It means that somehow we could tell that we are back to the pre-COVID normal times, but at the same time, what we see, what has happening in the shopping center. Well, basically, we have expected that the footfall and the turnovers in the shopping center will be very fastly recovering to the figures which was close to the pre-COVID times. But unfortunately, when we really look at the data and information in the March, we understood that for people, it became quite hard to adopt after all those COVID restrictions. And therefore, for them, it's very hard to understand that, yes, we're reopened, it's possible to go to the shopping center without any certificates, to get the same experience, to go to the for the shopping, to fashion stores and etc. Because also we saw that the main habits of how people are purchasing goods are really switched towards the e-commerce, and people also using the e-commerce in the daily life even after the time when the all restriction was cancelled. And it means, so we actually saw that in the March, it was slight increase in the people flow in the shopping center, also in the turnovers, but at the same time, it was not significant as we have expected. So it means that first of all, we need some bigger time to adapt to the current situation and just to feel that it's possible to go free to the shopping center. On the same time, it's a big call to all landlords, because actually we already understood that for customers, it's very easily to adapt to some new things. It just passed 2 years while there was the COVID, and the people already tend to use the e-commerce for ordering the fashion, food, some other goods. So it means that actually we are get used to some new habits, which actually is very comfortable in our daily life. And therefore, right now, what we also see that the major shopping center, they started to think about some other services and experience, what will happen in the shopping center, some other activities, what is possible to how it's possible to attract customers back to the shopping center, but also how we see the market is reacting. What of the reaction is basically demand for the multi-functionality in the shopping centers in the other retail objects. And right now we see that multifunctional like objects where there is connection with the residential offices in the retail, this is the key. And this is basically the demand from the customers. And for customers, we see that it's much more interesting to have all those functions in the one place and have various services, and also the retail as a typical fashion and non-fashion in one place. So it means, first of all, that the shopping center should provide more multifunctional activities inside shopping center. On the same time, there is the shopping center which are focusing on some services and other activities. But also in the future, we see that everything like offices, the retail, and the industrial is really connected. And yes, not industrial, but residential. Industrial is too early to be connected to the retail. It's all connected in the one place, and the multifunctionality is the main key how it will be also developed in the future. If we're looking at the notable events, and actually from the tenant perspective, what have happened to the market, that it's very important to know that as before, the grocery segment is booming, and we saw that the Lidl opened their first stores in Estonia. And at the same time, we may observe that in Lithuania, there was opened very interesting concept of the IKEA on the street retail, which was providing the fully served service and fully automated. So it means that the grocery segment is still developing. It's looking for the new niche products and the new niche location where it should be focused. And also this is the way how we see the trend for the current year and for the upcoming years. And basically this is the main information what we wanted to mention regarding the retail segment. Right now I'm passing the floor to my colleague Kasper, who will comment on industrial segment. And in case you have some questions, please feel free to contact me. Thank you.
Yeah, thanks, Evgenia. Hi, everyone, and welcome. And let's jump in Q1 industrial. So I wanted to remind you, please feel free to use Q&A section, and we will answer your questions during the webinar or after it when possible. So basically, if you're looking at Q1 2022, it came to us with several challenges. If looking at industrial segment, then basically, first of all, the increasing utility costs, as Evgenia mentioned, that impacted retail, but it also showed significant impact on industrial, and it pushed, I'd say, tenants to evaluate the building energy efficiency. And we were talking about building energy efficiency for a while now, and developers, they were really focusing on that during past almost 2 years of development, but that will more and more push tenants to see and to evaluate how the energy efficiency impacts the overall cost of the tenants during the tenancy time. And secondly, also for both existing projects as well as new developments, it made developers and building owners think about alternative energy sources for their buildings. If you're looking at well, the main challenges, then of course the war in Ukraine made significant changes in tenants and developers' plans as such. But well, we have to understand that we don't have a crystal ball here. We won't be able to predict the future. But what we see here internally, that there are some parallels and similarities with the first wave of COVID 2 years ago, when several decisions were and are at the moment put on hold or postponed by market players, and they are monitoring the situation and monitoring the impact. And we here in Colliers as well, we are closely monitoring the impacts on the market, how it will change the situation in the market. And there are some areas where it will be more visible. We see some indications at the moment, but more clearer impact will be visible in upcoming months. And this is mainly concerning the projects under planning, with construction starting in nearest months. So that's going to be an impact on the pipeline, impact on the rent rates, and potential future vacancy. As well as tenants doing business with Russia, so the impact on overall vacancy of existing stock. So if you're looking at current stock at the moment, what we have in Tallinn, Riga, and Vilnius, then you can see that in Tallinn we have 1.8 million of square meters under the roof. During the first quarter, the biggest delivery was Sanitex Logistics Center expansion of roughly 10,000 square meters. If looking at projects that are under construction, so you can see 142,000 square meters under construction, which consists of 40 projects at the moment. From those 40 projects, 17 projects with GLA of 60,000 square meters are stock offices. Apart from stock offices, the rest development is mainly split in 50-50 proportions between speculative and build-to-suit development. If looking at Riga, then at the moment we have 1.35 million square meters under the roof. We did not see significant deliveries during first quarter, but the construction pipeline is pretty large. It's 183,000 square meters under construction, mostly consisting of build-to-suit projects. And the biggest developers, I would mention VGP, who are developing at the moment 70,000 square meters of industrial space. One thing to remark, actually, if you're looking at those projects that are under construction, only several of them are stock office projects. So we clearly see the room in Riga for new stock office development. So this segment should be in focus for developers in upcoming years. If you're looking at Vilnius, then overall stock at the moment is 867,000 square meters. And during first quarter, the largest delivery was Liepkalnis Industrial Park by Syrian Development of almost 20,000 square meters delivered. If you're looking at projects that are under construction, we can see 69,000 square meters under construction in Vilnius. In general, in Lithuania, in all biggest cities, the total volume is more than 100,000 square meters under construction. And what's remarkable that 50% of those projects that are under construction, they are stock office development projects. So stock office development in Lithuania is really active at this moment. If we're looking at Q1, then also there was one project, J55 Logistics Center by Syrian Development, that started construction during the first quarter of this year. And the biggest developer in Lithuania currently, Syrian Development, is doing more than 32,000 square meters of industrial space. If you're looking at pipeline for the future, and during our market report, we showed significant numbers of projects under planning, then there are, I'd say, three major trends at the moment with projects that are under planning and developers doing those projects. So first of all, we saw, and actually during the first quarter, we saw several land transactions. This means that at the moment, actually, developers, they are increasing their land bank for future projects to come. Secondly, projects that are under planning, they are really in active design stages at the moment. So design has not been postponed, and projects are being delivered to the stage that construction can be launched. And what's concerning construction, that basically what we see at the moment for those projects where the design is completed and the construction has to start now or in upcoming months. So those decisions are being temporarily postponed. They are put on temporary hold, and developers are evaluating the construction costs, and also we can see impact of supply chain disruptions of construction materials. So we are clearly monitoring the situation, and we will see in upcoming couple of months how this situation will impact new development pipeline in general. If you're looking at the vacancy, that we see that vacancy level is clearly remaining low, 3.3% in Tallinn. In Riga, vacancy decreased to 2.4%. And there was a slight increase in Vilnius to 0.1% of industrial space. But in general, the vacancy levels in the Baltics, they represent the general trend, which is in the EMEA region as such, where the average vacancy also remains low, between 3 to 4% of industrial space. So basically, this marks a general shift of the market from tenants market to landlords market as such. If looking at the rent rates, then we clearly see and we can start to feel that the rents are under upwards pressure due to construction cost increase as well as low vacancy. So in general, a couple of words, this was all about industrial and logistics, and I can give floor to my colleague Agia to continue with the offices.
Thank you, Kaspars. Honestly, I am not sure what I can add to the market, because I think most of the largest challenges that are currently in the commercial real estate market has been discussed already by my colleagues. But I will try to do my best and give an insight like what is happening with the offices. So first, in a way, I have to congratulate all of us that we have finished the largest remote work experiment that has been done for the last 1.5 to 2 years. What we have been saying since start of March, and mostly now in April, is the return to offices. What does that mean? As you saw, the 3 of my colleagues were presenting from the office, and I am myself presenting from home. So this is really also how the office occupancy mostly looks like nowadays. So looking at the large companies, which we would usually use an example, then Google went back to the office this week. What is their strategy? They decided that they divided the positions into those that can work remotely and those that cannot, which is quite common currently in the market. And they said that those that have to be at office, they are going back 100%. And then those that can work remotely should plan to return to the office 3 days per week, and then 2 days if they want, they can still work remotely. Also, at the end of March, Meta, or better known as Facebook, returned to the offices, and they said, we would like you to return. However, you are free to choose how you do so. In case you need a few more months to be sure that COVID is not affecting you anymore, you can still work from home. You can still work remotely. What did Microsoft do? Also quite interesting. They said that you can work remotely if you want to, but if you work remotely more than 50% of the time, then you have to, this should be approved by your manager. Once we did the survey, which was done last year by Colliers, then 63% of the companies plan to keep some kind of hybrid model. So what is happening now in the market in the Baltics, what we see is that mostly companies still are using this hybrid approach. And what seems to be a reason for that is fight for talent. As we see in our markets that this is a real issue. The workforce availability is limited. So this fight for talent is doing two things. First of all, this is having better offices, and the other thing is giving more freedom to the employees to work as they want. Do we see companies that have decided to work fully remotely? Not really, as it doesn't really work for many companies. Have we seen some that are fully back to the offices? Yes, however, the next quarters will show more because really the restrictions were lifted just now. One other thing in this subject is that in terms of, I think, last year or so, there has been the saying that the future of the offices, smaller offices that we use only for collaboration purposes, and then the companies will reduce the size of their offices either when they move or already as of now. In reality, we don't see that as a trend in our markets. We saw at some point some subleases. I think we were discussing that like almost 1.5 years ago, that there was some sublease market. Not really that of a thing as of now. But yeah, what we wanted to say is that we see lots of expansions already in the market. We see companies planning for future expansions. We see them when they are moving, taking at least the same size of the premises, meaning that yes, in some cases they are having smaller premises, but that's definitely not a trend, and not a clear pattern as of now. What else has happened that this not clear approach to how we work further is questioning like company strategies in terms of workplace, in terms of how they will work further, what are they benefits in that sense, what are they giving to their employees. So I think we will see some impact on that on the market. However, what we have seen as of now, that not that many companies have done their homework up till now, and we'll see some changes also in the future. And then let's go further to the supply currently in the market. Then in Q1, in Estonia, there was also, in Tallinn, there was only one small project delivered to the market. In Riga, there were no projects delivered, and in Lithuania, there were 3 projects, in total adding 36,000 leasable square meters to Vilnius market. And what's interesting, Vilnius is doing it again. 80% of this area is pre-leased. If we look at the market in total, then currently there is almost half a million leasable square meters under construction in all 3 Baltic capitals together. Around 40–45% of those were planned to be delivered to the market this year. Here, there might be some delays, as my colleagues also discussed before, that It's the availability of materials that is of a question and might make the construction process a bit longer. However, we haven't seen really projects being stopped. The situation is a lot different in terms of projects into planning, because here we had this idea, okay, we will for today try to prepare statistics, how many of the projects in planning are high probability to be started, and then those that will be with a low probability. And what we realized that that's not possible to do so, because honestly, all the projects currently in the planning stage are really just put on a temporary hold. Nothing has been started since the start of the war, since the increasing costs, since lots of uncertainty in the market. And the time will tell. But what currently is the situation is in the market is that the business plans are not working. You cannot really put in your business plan unclear costs and try to get money to start this project. So this is the issue with the project start. Let's hope for the best, but we'll see where it goes. In terms of demand, even though at some point we were a bit concerned that similar situation to the start of the pandemic could occur. However, no, we see that the transactions, lease transactions that were on the table, either have been finished or are still in the process. Only few have had some problems, but mostly those are then related to the country that is in a war or the countries that are under sanctions. Yeah, and if we speak about some figures, then of course relatively good figures in Vilnius. More than 17,000 square meters have been leased out during Q1. In Riga, around 8,000 square meters. The largest transactions, which is interesting, still a lot of pre-lease transactions, even in a market which is not known for it, which is the Riga market. The largest transaction is the pre-lease agreement for more than 2,000 square meters in Verde complex, which will be, the first stage will be finished this summer. Also in Tallinn, the largest transaction is the finance sector transaction release in Tondi Park. And what's interesting in Vilnius here, the largest transaction in Q1 was for a new co-working workland for more than 2,000 square meters in Triburis business center. Yeah, and regarding the demand also, we had these speculations that there might be companies that decide to relocate due to the geopolitical situation. Yes, we have had some requests in all three markets. However, no notable deals yet. We'll see what the second quarter will bring. And of course, still the active sectors are finance, IT, GBS, nothing new there. And yeah, the same topic as my colleagues were discussing at first, the construction prices, which are bringing a lot of uncertainty. And here the uncertainty is not only with the projects under construction, whether they will be finished, it's also about the fit-out costs. And here is that we have seen that contributions to fit-out costs have been increasing. However, still they are not enough. And then the question is how higher the rents the tenants are willing to agree to, because now the real issue is that everybody's looking at the total cost of having an office in that sense, and it includes also the utility prices that are increasing. We see that older buildings, especially for example in Riga, we have buildings that have gas heating that currently is significantly more expensive than before, and tenants are met with these increased costs. And since start of autumn 2021, We see them being faced with larger costs and being in front of a choice what to do in the future. Also, our Estonian colleagues were saying that there are many companies that are interested in moving like in 1 to 3 years, but what everybody is asking, where the rent rates are going. We see that they are under strong pressure to increase, especially for new developments. They are increasing currently in specific projects, however, not in all projects yet, because it's still the fight for the tenants in some markets. And here, one also interesting thing is that we see development really being in line with this fight for talent, as we see that most of the development in all 3 markets is really happening either in CBD or in these campus-style projects, because these are the places where it is easier to attract employees. I think this was all from my side for today. Really, I hope that there will be more hope in the market going further. Yes, as of this point, it's all unclear in all markets, as you saw from my colleagues. Let's hope that we will find good sources for all the construction materials and that construction could go on. And yeah, saying that, thank you for listening to us today. Feel free to ask questions and send them in. I will check whether we have any questions right now. No, it's all good. And so the report will be sent out via email tomorrow. And you could also see it on our homepage tomorrow. And also, the recording from today's webinar will be available on our YouTube channel. Thank you.